If you've got more than £3,500 stashed away in savings, what you're about to hear could be more important than you realise. Just minutes ago, fresh reports have confirmed that HMRC is issuing letters to individuals with savings above a certain threshold, sparking confusion, worry, and in many cases, disbelief. Many pensioners across the United Kingdom who thought their nest egg was safe are now facing an unexpected demand, and the timing couldn't be worse with living costs continuing to climb and energy prices still straining household budgets. So, what's really happening? HMRC has begun cross-referencing financial data with bank records and savings accounts to ensure individuals aren't receiving more financial support than they are entitled to, particularly when it comes to pension credit, housing benefit, and other means-tested support schemes. Those with savings over £3,500 may now be subject to deeper scrutiny, even if they've declared everything honestly. The concern isn't just the demand letters themselves, it's the way they are being sent, often with little explanation, leading many to feel blindsided and vulnerable. For some, the savings that were meant to serve as a buffer in retirement are now being treated as a liability. But here's where it gets even more complex. Under current DWP rules, savings over £10,000 start to impact benefits directly, but now it seems even much smaller amounts are being questioned under HMRC's tightening compliance measures. And that's leaving many pensioners wondering, is this just a mistake, or the beginning of something bigger? This isn't speculation. These are real letters going out now. If you or someone you know has received one, you're not alone, and understanding what's behind it, what your rights are, and what you can do next is absolutely crucial. Stay with us, because in today's video, we'll break down exactly what these letters mean, how they may affect your pension or benefits, and what steps you can take right now to protect yourself. First, let's clear the air a bit. If you've received one of these letters, or you know someone who has, you might be feeling all sorts of emotions, shock, stress, even a bit of anger. And understandably so. It feels like you're being penalized for doing the right thing, saving money, being responsible, trying to get through retirement without relying too much on the state. But that's exactly where the confusion begins, because for many, these savings weren't hidden, they weren't secret, and in most cases, they were built up slowly over time. Perhaps for unexpected expenses, future care needs, or even just a bit of security in an unpredictable world. So why now? Why this sudden push from HMRC? Well, the backdrop to all this is something we've been seeing more and more of lately. Government departments are under pressure to tighten up the rules, reduce benefit fraud, and recover money where they believe it's been overpaid. With the cost of living crisis squeezing every department and public service, there's growing political momentum to balance the books, and unfortunately, that can often mean zeroing in on the most vulnerable groups, pensioners, carers, and those on low incomes. What they're doing now is making use of increasingly sophisticated technology and data sharing agreements between agencies to monitor people's finances much more closely than ever before. So if you've had any movements in your bank accounts, any interest earnings, or even if your savings have just grown quietly over the years, it's now being flagged up by these systems. Now, let's talk about this £3,500 figure. Officially, benefits like pension credit have savings thresholds, with £10,000 being the point at which deductions start kicking in. For every £500 above that, a notional income is assumed, reducing how much you get. But here's the confusing part, some people are getting letters even though their savings haven't crossed that £10,000 mark. Why? Because the threshold applies only to some benefits, and because HMRC may be investigating discrepancies in what was declared previously versus what's showing up now. It could also be that certain types of accounts, like ISAs or joint savings, weren't fully detailed in prior assessments, and now they are being re-evaluated. And here's another twist. Some pensioners are being contacted even if they've never claimed pension credit or any other support. That's because HMRC may have spotted what they believe to be undeclared income, possibly from interest, small pension pots, or dividends that are now being questioned. It's not just about benefits, either. If your savings generate any form of taxable income, even a small amount of interest, it may be enough to trigger a review. And while for many people the amounts are tiny, just a few pounds here and there, it's enough to bring you under the spotlight of a system that's becoming increasingly automated and unforgiving. Now, let's be honest, this isn't just about a letter. This is about the emotional impact it has. Imagine opening an envelope and seeing a formal letter accusing you of receiving more than you should, or demanding repayment for something you don't even understand. It's upsetting. For some, it's downright terrifying. There's no gentle explanation, no human touch, just pages of jargon and an implied threat that if you don't respond correctly, things could escalate. And for older people, especially those who don't have easy access to the internet or who struggle with phone systems, this creates a real sense of helplessness. It's like being thrown into a legal or bureaucratic maze without a map, while the clock is ticking. That's why it's so important to stay calm, stay informed, and take action the right way. The very first thing you should do if you receive one of these letters is not panic. Read it carefully. Yes, it might look intimidating, but take your time with it. Look for specific details. Are they asking you to repay something? Are they requesting clarification? Are they giving a deadline? Once you've got a grip on what's actually being said, you can decide what comes next. If you're unsure about the content of the letter, or if the wording seems vague or confusing, it's perfectly reasonable to contact HMRC or the DWP and ask for a full breakdown. You can request the information they have on record about your savings and income, and you can challenge anything that seems incorrect or outdated. And here's something not many people know: you are entitled to support in understanding these letters. There are several charities and organizations across the UK that specialize in helping pensioners navigate these issues. Age UK, for instance, has a brilliant helpline, and many local branches offer in-person advice. Citizens Advice can also guide you through what the letter means and help you draft a response if needed. You don't have to do this alone. If you've got family members or friends who are good with paperwork or have experience with the system, it's worth asking them to help you go through it, line by line. A fresh pair of eyes can make all the difference. Let's also take a moment to talk about the savings culture we have in this country. For decades, pensioners were told to put something aside, to prepare for retirement, to be financially independent. And now, many feel like they're being punished for doing just that. It's incredibly disheartening. The government's own messaging has been mixed, on one hand, encouraging saving and planning for later life, and on the other, creating a benefit system that seems to work against those very behaviors. It sends a confusing and frankly unfair message. But this is also why being informed is your best defense. If you know how the system works, you can protect yourself from mistakes, overpayments, and misunderstandings that could otherwise cost you dearly. And while we're on that subject, let's clear something else up. Receiving a demand letter doesn't automatically mean you've done something wrong. Mistakes happen all the time in these systems. Data may have been entered incorrectly. Interest rates may have shifted, triggering a flag in the system. Or perhaps a joint account with a partner was recorded under the wrong name. There are all sorts of technicalities that can set this off. That's why checking the facts is so crucial before you agree to anything or send money back. Don't assume guilt just because a formal letter showed up. Now, let's look ahead a bit. What does this mean for the future? Well, the reality is that financial scrutiny on pensioners and benefit recipients is only going to get tighter. The government is investing more in compliance checks and automated systems designed to catch what they see as errors or fraud. And while that might sound reasonable in theory, in practice it often means a flood of letters going out, many based on incomplete or misinterpreted information. We're seeing a shift towards a guilty until proven innocent model, and that's deeply troubling, especially for those who don't have the tools or the confidence to fight back. But here's the good news: you can prepare. If you haven't received one of these letters yet, now's the time to get your financial paperwork in order. Make a clear list of all your savings accounts, including how much is in each, whether they are joint or individual, and whether any interest has been earned. Keep track of any pension payments, private or state, and double-check what you've declared if you're receiving any means-tested benefits. That way, if a letter does come through the door, you're not scrambling, you've already got the information ready to respond clearly and confidently. For those already receiving pension credit or housing benefit, it's worth booking a benefit check every year. Many local councils and charities offer this service, and it helps ensure that your information is up to date and that you're not being overpaid, or underpaid, for that matter. You'd be surprised how many people are actually missing out on extra support because they weren't aware their circumstances had changed in a way that made them eligible for more. The system is complicated, and even small changes in income or savings can have a knock-on effect, so regular reviews are essential. We also need to start talking more openly about the way the benefits system treats savings. The rules haven't been meaningfully updated in years. £10,000 might have seemed like a big sum 2 decades ago, but today, it's hardly enough to cover even a modest emergency, let alone provide true financial security in retirement. That threshold should be looked at again, with inflation and the real cost of living taken into account. Until then, many pensioners will continue to feel that saving money puts them at risk rather than giving them peace of mind. Another thing worth noting is that some pensioners are choosing to spread out their savings in smaller accounts or gift money to family members in a bid to stay under the radar, but this can backfire. The DWP has rules about deprivation of capital, meaning if they think you gave away money on purpose just to qualify for benefits, they can still count that money against you. It's a tricky area and one that requires careful planning and honest advice. If you're thinking about gifting money or rearranging savings, speak to a financial advisor or benefits specialist first. That way, you'll know exactly what's allowed and what might cause problems down the line. In the meantime, remember this: you are not alone. Thousands of pensioners across the UK are receiving these letters, asking the same questions, feeling the same frustration. And while the system may seem cold and unfeeling, there are people and organisations out there ready to support you. Don't suffer in silence. Reach out. Ask questions. Push back if you need to. You've worked hard your whole life, paid into the system, and you deserve to be treated with respect and fairness, not suspicion and pressure. So as we bring today's discussion to a close, keep in mind that this isn't just a one-off incident. It's part of a bigger trend that requires us to stay vigilant, informed, and connected. Whether you're dealing with HMRC, the DWP, or your local council, remember that you have rights. You can ask questions. You can appeal decisions. And above all, you can stand your ground when you know you've done nothing wrong. If you found this information helpful, or if you know someone who's been affected, don't forget to share this video. Leave a comment below with your thoughts or questions, we'll be reading them all. And of course, subscribe to the channel for the latest updates on pensions, benefits, and everything UK seniors need to know. Together, we can make sense of the system and make sure your voice is heard.